Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's August 15th. This will be our chart lesson today, and this will wrap up our week. No chart lessons on Friday, so I'm actually going to take the entire day off tomorrow, so I'm not even going to come in, so there won't be a mid-morning chart on the website either. Um, I made a comment today. Most of you probably already seen that, but just in case you didn't catch today's and you catching the video here, there won't be a mid-morning chart in the morning. I'm gonna take the entire day off and just take me a long weekend. I need a little break here, so I'm gonna take off tomorrow. But anyway, basically as a range day today, there's a little bit of a downward bias to this most of the day. It really was kind of flat right in here, and you probably would have wanted to move this down somewhere along in here later in the afternoon, right along there. Looks about right. Um, I started off with a little higher, but it just kind of tightened up as the day went on. So you can see most of the price actions inside those two lines today. 90% of it basically. Uh, we dropped below a little bit right here. Of course, this was in the overnight, but we dropped a little bit below here. We might have broke slightly above it a few times today, but nothing to really write home about. So quickly before I go through the trades, the volatility continues to be extremely high. A lot of these bars are huge. I'm marking the trades, but just understand that this is not a normal market, and it won't always be like this. We get periods where it's volatile, and there's good and bad that go with it. The good is if you catch a nice move, it's easy to get a big runner and a fast move and make a lot of money. On the other hand, if you're wrong, it moves real fast in the other direction. And on a day like this, you can get whipsawed really easily. So you got to be careful. Um, but just understand that there's not much you can do about the size of the signal bars. You could drop to you could drop to a little smaller chart and see and see if your bars drop a little bit. I'm not crazy about that idea. We've done it some in the past when it got real volatile, so it's an option. You could drop down to maybe try a 1500 or 1000 tick chart and just see how it trades, see how it looks. You're gonna have a lot of bars, but it might help you out. Somebody else wrote to me and said they went to a 12-point range chart, but you can't use a range chart. You're not gonna see the details you can see um, in this tick chart. I mean, I actually tried range bars and spent a few months with them years back, and it's just not the same. You're not going to see the same level of detail, and you're going to get a lot of fake, false entries and so forth that don't follow through. And personally, I think you'd be better off to stay away from range bars. Yeah, it gives you a nice bar with a size to maybe help you get in, but it's not giving the true reading of the price action is the problem. And of course, if you can't read the chart anyway, it doesn't matter. But once you can read the chart and you understand what's going on, um, going to a range chart is just going to screw you up. So I'd stay away from it. It's not worth the effort. Stay with 1500 to 2000 ticks, and if you want to try a little smaller chart and just see how it goes for a day or two while it's real volatile, you might try that. We've done that some in the past. Um, Personally, I think you're better off to stick with this chart, and if worst comes to worst, just make sure you're sim trading right now. Be very careful trading this live, especially if you're new and you're not real seasoned and you're not real comfortable and confident in your chart reading. You're probably better off just to sim trade this, because yeah, you could make a lot of money, but you could lose a lot of money real quick if you're not careful. So the market will be here tomorrow. Don't be That's one thing. People, they get all excited about trading and they can't wait to trade, and they don't want to go through the process of learning. They want to jump right into it and trade with real money, and you're just going to be what I call a donator, and you don't want to be a donator. Save your hard-earned trading capital until you get more experience. And most people never listen to that. and they blow 2 or 3 accounts and they give up and they go away, and they never even really came close to getting started learning. I mean, you're going up against professional traders that have been doing this for years and years. It's like, I liken this to, it's like trying to say, right now I'm going to go play professional baseball tomorrow. And if I step in that batter's box in a live game against a professional pitcher, what are the odds that I'm going to get a hit? Probably very slim. Sure, I might stick my bat out there and accidentally make contact and get a base hit, but most likely I'm going to strike out, and I'm going to strike out every single time because those guys are too good and I don't have the experience. Probably by the time I decide what I want to do with the bat, the ball's probably already going back to the pitcher from the catcher. That's how, that's how hard that would be. And that may resonate with some of you, maybe others. Another thing that may resonate with some of you is think about a musical instrument. Think about some of the world-class musicians that have spent their entire life playing an instrument to get where they are. They didn't get there overnight. They've been practicing and playing for years and years and years. And if you decide you want to play the guitar tomorrow, you're not going to be able to stand up there and do what they do. It's going to take you a long time to get that proficient. And sure, you might have an ear for it, and you might be musically inclined, and you might pick it up and play, but you're not going to play it like they play it without having that time and experience. So just keep that in mind. That you don't learn this overnight. You need a lot of experience and time. So be careful about getting live. Don't be so anxious to go live. The markets will be here tomorrow. I remember how it was though. You're eager and you want to get started and you think you got it down, but you don't. Trust me. If you've only been trading for a few months, you don't have it down. I don't care how smart you are. I don't care what your IQ is. I don't care how good you are. You're not going to have success that quickly. You might get a few winning trades, but you're not going to have great success and win consistently until you've done this for a while and got a lot of experience. So just keep that in mind. And I'm not trying to discourage anybody. I'm trying to help you and encourage you. But the main thing is you got to have a realistic understanding of what this takes, and most people do not. They think they can read a price action manual and study that for a few weeks and then sim trade for a few weeks, and they think they're going to be ready to go and they're going to conquer the world, and you're just not going to do it because you're going up against seasoned professionals, and the markets do not move using common sense. Common sense doesn't help you when you're a trader. In fact, using common sense just it'll completely throw you off, and that's why this is so hard, because it goes against human nature and common sense. So anyway, but getting back to the bars, you might try a little smaller tick chart and see if that lowers the size of your signal bars. But the other thing to do, we talked about yesterday, either skip the trade or wait for the trade to trigger by breaking below or above your signal bar and then dropping a limit order back within the 2-point rule and seeing if prices come back and fill you. The only problem with that is you're going to miss the best trades, because the best ones just take off and they don't even back up at all, especially when it's this volatile. So that's one way to do it. You still might catch some trades, but you will probably miss the best trades. The other way to do it is just to not worry too much about the 2 points. Say, hey, if it takes me an extra point to get my stop where it goes, then I add an extra point to my profit. So instead of scalping out with 8 ticks, I scalp out at 12. Or if it takes 4 points, you scalp out at 16 ticks. So that's probably the best way to do it, because it's not that hard to get 3 or 4 points when it's this volatile. I mean, like I said, most of the bars are 2 to 4 points, so or more. So it's not that hard to go ahead and get that extra move. When the market's is acting more normal, and you don't get a lot of big moves like that. It's too choppy. So that's when the 2-point rule will work. It works 90% of the time, but in a market like this, it just does not work because the bars are so big. So that's a couple of different options you can try, but I keep getting lots of emails about it. So I don't worry too much about the 2-point rule anymore. But when you're new, you can't do that. You have to, because if you don't, you'll lose too much money. So, but honestly, I don't even think about the 2 point rule. If I like the setup, I put my entry where it goes, I put my stop where it goes. I don't worry if it's 2 points or 3 points or 4 points. I take the trade. But if you're new and you're learning and you're just going live, or if you're not real consistent in live, you can't do that. So, be careful doing that. There's a reason that rule is there. And if you're not a real seasoned trader, well, don't ignore that rule. I'll just leave it at that. So anyway, I'm going to back out. We're going to talk about the trades. You can see it's mostly sideways. We started out in the downtrend. We had a break, and we moved down here and continued. We really were just going sideways. We finally did break lower and move on down here, but we quickly bounced back, got back inside, and we ended up closing right back inside the range. So this is basically a range day. With the failed break lower, we had a couple of little pokes through up here at the top, but for the most part, it was pretty consistent on the turn down. It's just the turn up that was not very consistent. So, and that makes it hard. When prices turn down up here every time, it makes it real easy. And when it turns up every time at the same place down here, it makes it easy because it's very predictable. But when you're turning it up and down at different places, then it makes it a little bit harder. So just keep that in mind. But let's back out, talk about the trades, and we're going to wrap up the week. Get this one behind us. Seven o'clock came right in here somewhere on this move up. I can't remember exactly where. Yeah, right. It was right here near these highs. It pushed up, and you can see how far we've gotten away from the EMA. And then we make this lower high in that big bearish bar, and you've got so much room back. Plus, on the trend up, you've already had your break, moved to a new high. This is a great place to enter, and this could be the high of the day, and I think it probably was real close if it wasn't the high of the day. And that's a quick, easy move. If you catch that one trade, you catch a runner, and you probably ride this thing all the way down. You get a failure right here. It looks like it pushes through the EMA, pulls back and tests it. I'm not sure if this thing broke higher or lower first, but it is a failed second entry long, and it did come back and test the EMA, and it's right off the key entry point. It confirms it, so I like going short there. It doesn't really matter too much about the bar. You could have just waited for the bar to finish, but if it broke higher and then turned down, I wouldn't have a problem with you putting a sell stop right there, but I can't remember how that played out. I reloaded my chart. I got a message from AMP this morning, and saying that there was some issue with CQG's data, and they said to reload your charts and reconnect. And so I did that. I didn't notice any problem trading this morning, like there were any issues, but they said there was some kind of delay in the data. So I'm not sure what was going on. I'm not sure if it really affected anybody or not. But if you notice something funny going on, it could have been, and you trade with AMP, it could have been, you use CQG, that could have been it. So, but I didn't notice anything. I just got the email, and just to be safe, I reloaded. And I don't remember any change, but I don't remember this bar breaking, being an outside bar like that. So either I'd already traded. I don't know why I missed that, but I think it might have loaded up after the fact, and that might have been one of the issues there. I'm not sure. So, but anyway, you moving on down. You get a break here and a couple of legs down, and you're trying to reverse. You might have gone long right here. I didn't mark it. This is really your signal bar, and this is just an inside bar. They're never very reliable. There is a failed second entry short right here, but now you just got all that resistance across there. I don't like going long into that, especially when you've been trading down and this thing is just kind of working sideways. So I don't see anything I like until you make this. Notice this little trend working up. You get a break. 2 legs up, a failed second entry short, and that's a small bar for a change. I like going short right there. And it kicks back right here, gives you a lower high and a big bearish bar. That's 2 great entries right there. And I'd be looking for at least a measured move down. You can see that first leg. And that gives you a target right down here, and you can see we came real close to that. And I also measured this one from here to here, and you can see they both put you in the same, about the same location. But that was 2 more really good setups where you would have caught a runner on this one anyway. There's a failure right here, but again, it's right into these lows, so I didn't like that one so much. You got a break here. It tried to go higher and turns down right off the EMA and goes out the other side. I like going short there. You got enough room to get out before you make a new low, so I like that one. And you might have considered going long here because you got a break now, 2 legs down that fail, and so that's a failure. I didn't mark it because you would think we were headed lower here. We did get the break in a new low, so there's a possibility we could be going higher here. But I just didn't feel comfortable with it because I was looking for a measured move, and we weren't anywhere near that. We still had a lot of room down here, and it looked like it was going to trap people at first, but it didn't. It turns out it moves on up. It gives you your scalp, and it double tests that breakout area and turns back down. I like going short there just because notice there's a high there, first entry, second entry, so you could just look at that as a failed second entry long and a double test of that area, that breakout area, relatively bearish bar, and that's a pretty nice move. It comes back here, gives you a lower high, but too bullish a bar. It comes back here and gives you a failure, and it is off the key entry point, but that looks awful congestive. You had to assume that we were probably trying to fill this gap here. So you might have taken that trade. I didn't mark it, but you might have taken that trade. I'll at least make it green. Oops. That's not exactly green, is it? And it just drops on down. And then, of course, we come down here and we bounce. You get a higher low right here. But that's the first close outside that. There's a good chance you could get another leg up, but it may just break higher and turn down. So I was a little leery of that one. That's another one you could argue to be green. We run on up and you get a failed second entry short right here. It wasn't a failure until it broke above here and it tried to go, it actually ticked lower again, so you get a double test of that EMA. So I like going long there. It's right off that trend line working up. Let me adjust that just a tad. This is actually would have been a measured move if we kept going higher. That didn't even come into play, so I'm just going to take that off. But there's your failure. That turns out to be a nice move up. Comes back again here. There's a hidden second entry, and that's a fairly bullish bar, but it's, you know, we just came right off those highs again. I wouldn't risk it. In fact, it's almost tempting to go short right there because you got to close out here and a couple of legs up, and you're a good bit away from the EMA. So that's another one. You could probably argue for it to be green. A lot of times you'll catch important highs and lows on these breakouts like that. So I like to risk them sometime if they look really nice like that one with a big bearish bar and being that far away. You got a lower high here, but you would have had to go short right into the EMA. I don't like that idea. It finally does come back right here and gives you another chance to enter. And notice how it comes back and tests this line from the underside and gives you a chance to go short. And you're just, at this point, you're just looking for it to make another leg down like this maybe, but you know, this thing kind of takes off. That's another great trade that where you would have had a runner on it. And of course you get a little failed break lower. Again, anytime you get these breakouts and you're that far away from the EMA, you might try to take that trade. It's a little risky. You're better off to wait on a higher low, which you don't get one till way up here. And you might have taken that one too, but I think it was better off to wait. And when it tried to go lower again and failed, I like going long right there. And you kind of see we're back in this range again. You might have considered even taking this one. It's a lower high. It broke higher and turned. There's no way you can go short down here, but when it broke higher and turned and went lower, you could have entered when it broke below that with your stop. sell stop, and that's a relatively small entry too. So that's a possibility if you enter it like I just discussed. You can't just enter below that bar one tick way down here right into that support. It comes back and gives you another test of it, a big bearish signal bar. Now you got plenty of room. Just go short right there, and this time it goes right on through and just keeps going. So that would have been another great setup. There's a little breakout pullback short there, but it's too congestive. There's another little pullback right here. Again, I probably would have taken that or marked it, but with those 3 marching lows right there equal that one, too risky. Then you just kind of drop into this thing. You don't want to trade that. You might have considered going long here. I marked it green. Better to wait on the higher low, which doesn't come till here, and then I don't like the signal bar. If you had a good signal bar there, go long. You finally get your failed second entry short right here, and it bounces right off that trend line. I only marked this one green. That looks really congestive. You might go long there. It's not a great setup, though. I'm not crazy about it. I did mark it green just because it's a failure. Nothing else I like right here. There's a higher low here, not a very good signal bar. And then, of course, now you got this trend line break and 2 legs up. And what do you know? It breaks above this and gives you a little failed breakout way away from the EMA. Again, I only marked it green, but you know, I like those because you might catch an important high. And that would have been an important high. You can see how this thing to the bottom just fell out of it after that. You get a lower high here, but too congestive right there. There's your failed second entry long, but now you're going short right into the low of that trend channel line. But notice how it comes back right here. This is a double top, so you can count that as a new high. First entry, second entry, and you could have gone short there. That's such a huge bar, but again, you can't worry about the size of the bars right now. So I'd probably take that trade. There's another one right here that broke higher and turned and went out the other side. The only problem with that one is here you got to go short right into this last low right here, and that's getting risky. And you can see it wouldn't have worked. It bounces real quick. But it gives you a break, a new high, and there's a second entry short right there. That's where you enter. And when it came back again and gives you another entry, now you got a double test too. I didn't draw my little line, but there's a double test there. I'd definitely enter right there if I wasn't already in. And this is a good example of why we only go for 4 ticks. I think there was a couple of extra ticks here to spare, but this on a volatile day, on a non-volatile day, you probably would have got your scalp and then it would have bounced. So you would have to consider, here's something else to consider. On this one, I wouldn't have any problem going short, but when it didn't go lower here and you're kind of stacking up, even though I marked that one red right there, that's one to consider because you are going short right into those lows, and generally it was going to fail just like it did here, but you would have got enough to get out. So, you know, really that one ought to be green probably. I'm thinking if I wasn't already in here, I may not enter there. I really think it's pushing it. Even though it worked, I'm not crazy about it, so we'll change it to green. You had a little failed break higher, but not a very good signal bar. This bar is way too big. You're probably going to pull back with that double bottom, and notice how it does pull back. Then you got to break out, pull back short. So that's and a failed second entry long as well. So that's the place to go short. And look at it go. This thing just keeps going this time. There's a couple more pullbacks. I don't like any of them. You're starting to get away from the EMA. You know, you're having to go short right into the lows. Although a lot of times, you know, that is a strong trend, but notice if you wait on the second entry, you get another chance. And again, you get just enough to really get out of this thing, and it bounces. And it turns out this is a failed break lower. It comes back. It actually breaks lower right there and turns up. That's a possibility because there is a new low here. So first entry, so second entry. It's a little breakout pullback long. That's a possibility. And then here it just gets too congestive, although it does bounce off the EMA and it's back inside the trend, but I'm not crazy about that. You do get a failed second entry short right here, and there's actually a hidden second entry long, so that's another possibility, but I like it better when it comes back again. And I drew that trend line off the high, and then I drug it down here. Of course, it could have been right here, might have been right, but I was assuming it was here, and I just was kind of waiting on it to come a little lower, and it actually did right there. And gives you a second entry long too. Notice that high, first entry, second entry. So that was the place to enter, in my opinion. It actually ticks back here, but like the other one over here, I think by that time I wouldn't enter. But then it comes back and gives you another second entry right off that trend line. Notice that high, first entry, second entry. Look at that nice bullish bar. And then this time it takes off. And that gets you in the 2 o'clock hour. So like we have had several, all week here, you get, you're getting lots of, there's probably other trades you could argue for. I talked about most of the green ones today. There's a lot of green ones in there. But, there's just so many trades and they come out so often here that during this kind of deal, you're better off to wait on a good setup because it's just a matter of time till a good one comes along. So but this thing's almost 30 minutes long, so I'm going to wrap it up. I'm going to start my weekend. Hope you had a great week. We'll be back again Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.